We're going to go over to the internet, all right? We're going to go to ord-oracle.com right there in the URL bar. Now, Tim Ord, he joins us every Tuesday and Thursday. Fantastic analysis. I really recommend checking out his website. You can get the newsletter, you get his book, you can see his performance. Additionally, you can go over to TFNN.com, go to the services tab, and we have two fantastic webinars from Tim Ord, that is Secret Signs of Market Tops and 6 Secret Ratios Every Trader Should Know. Now, what I'll say is if you're kind of new to Tim's strategy or kind of new to trading in general and looking for different technical analysis that can kind of help you out, I really recommend checking out the 6 Ratios Every Trader Should Know. Very, very important. If you have a little bit of experience under your belt and you're kind of looking just to increase your skill set, really the Secret Signs of Market Tops is a fantastic one. If you do that, go ahead and send me an email. We're going to get you in there. Tim, how are you doing?
Good. A lot of things changed since last week.
Haven't they?
But actually, let's look at the bigger picture for right now. I think this may change.
Yeah.
But chart one, we've been showing this chart. This is kind of the reasons why I've been bearish. But the bottom window, the bottom window is the 21-day average of the ARMS index. Next one higher is the 63-day ARMS index. And both of them are this is updated to today. Both of them, well, the 21 day is basically on the verge, but the 63 day is actually still in bearish territory. This actually can correct itself if the market starts showing panic and the trend closes. Mm-hmm. And that may happen over here over the next 30 days. So this whole thing may change. But right now, it actually still leans bearish. I noted the times. This chart goes back like mid-2017. And I noted the times in pink, shaded pink, where this 6-day trend got below 1, and all of them came at tops. And so we did have a minor top here so far, but the question is, will that minor top turn into a big top?
Right.
And that's why we're kind of trying to define what may happen here over the next 30 days or so. So let's flip to chart 2.
Yep.
This is just a shorter term chart. You want panic in the market. Panic really is energy, and energy drives the market. And the bottom window is the 3-day trend. The next window up is a 5-day trend. And the next higher window is a 10-day trend. So this is a shorter term view of the trend. The previous chart was the 21-day, 63 days. So that looks at the bigger picture. This looks at the smaller picture. And anyhow, readings of the 3, 5, and 10-day trend over 1.2 is usually bullish for the market. And I shaded in pink the times when all three of those lined up. And right now, we got the 3-day trend at 109. You got the 5-day trend 107, and you got the 10-day trend at 99. Not real bearish, but it's not bullish. Mm-hmm. If you get down around 0.9 on these three averages, that'd be bearish. We're kind of in the middle. We're hanging around a little over 1, right around 1.
Right.
So it's not bad, but it's not good. It's not panic. So it's, I'm thinking these charts are actually going to go into the panic range. And I think that may happen over the next couple, 3, 4 weeks, whatever. The reason why, kind of jumping ahead here a little bit, is the Zwag breast thrust indicator. Now this indicator, actually defining it, is the NYSE advancing issues over NYSE total issues, and you take a 10-day average. And what needs to happen is you need a reading below or at 0.4 or below, then rally to 0.6 or higher with 10 days or less. Well, on January, I forgot what it was, January 10th, I think it was, we hit 0.41. Well, that's not 0.4, but in my opinion, it's close enough. I mean, it's close. And today we're at 0.61 when I made this chart, so we're actually over what we need to be. And this whole thing happened in 6 days. And I think the 6 days is real relevant. If it took, if we had a 0.41 and took 11 days, I don't think this indicator would be that powerful, I guess you might say. But we hit 0.41 to 0.61 in 6 days. To me, that's close enough. And I think we're probably setting at some sort of a low. And actually, I think we've been basing this market for a while. I think actually the decline's over. I think the worst case scenario, I think we'll flip to chart 4 real quick.
Yeah.
I think the worst case scenario is the gap. I have a pink area I noted, and those pink areas are gaps. We're running into a gap right now. We're actually exceeding it. But there's a big gap from about 582 to about 590 or 585 range. And that's a big gap. Normally big gaps get filled. Small gaps a lot of times don't. So I'm thinking at some point we're going to go down and fill these gaps, or at least one of them. And depends on the trend reading on the close, filling those gaps will be the next big signal. So
perfect. Yeah, Tim, please stay right there, folks. We'll be right back with Tim Ord right after this break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Again, if you want to check out his website, which I strongly recommend, you go to ord-oracle.com. Additionally, we have 2 fantastic webinars from Tim on our services tab at TFNN.com. Tim, before we went to the break, we were looking essentially at the SPY chart, right? You have a massive gap right around that 582 level. Of course, we're hitting 602 right now. You're anticipating potentially filling that gap, since larger gaps usually get filled, as you were saying.
Right. There's a couple of other things here, too. If you look at the bottom window, that's the VIX. And if you notice, VIX is not hitting a new... let's go to the top window again.
Sure.
But on the SPY in late, looks like about December, probably 24th, we were hitting a new high. And today we're above that high. And I drew a red arrow connecting those highs. And if you notice, we're higher now than we were right around that Christmas time. So the S&Ps are hitting a higher high, but the Christmas time, if we go down to the bottom window, and the VIX is making a higher low. In other words, if there was no divergence, the VIX should be making a lower low than the December low. If you know how the VIX works.
Yeah.
So the VIX, there's a divergence here. So the VIX should be hitting a new low below the December low, and it's not doing that, even though the SPY is hitting a higher high above the December high. To show no divergence, the VIX should be making a lower low here, and we're not. So we have a divergence here. So the VIX is actually showing more fear than what happened back in around that December, or around the Christmas time frame. So in other words, you got a divergence in the VIX. And also, if you notice today's volume, I did this a couple hours ago, but volume is extremely light today. And once you hit a new high, you want volume to expand, not to contract. So you got some minor divergences here, but you got a positive ZBT, Zwag Breath Thrust indicator. So what that tells me, on the next pullback, you want to buy it, because you got ZBT only shows up in bull markets. So if you're in a bull market, you want to buy the next decline. Well, the next decline, I think, is coming because there's not enough energy in the market today to keep pushing this market higher, because the volume's kind of lacking, and you got a negative divergence between the VIX and the SPY. So how far will you pull back? Normally you'll pull back where previous trend readings reach bullish territory. And I noted in blue the times when the trend was near 1.2 or higher. So somewhere between 582 and basically 592 is the support area, and that's the area you want to buy on the next pullback. Because once you start getting panic in the trends, and trend readings only come at panic trend readings only come at lows, you want to buy in the next panic. So probably when you get into that blue area noted on the SPY chart is probably when the trend will start going up again, because once it starts going in a certain region, once you enter that region again, normally the trend will start to rise again. So I'm thinking somewhere between, at worst case, 582, best case is 592, which is quite a bit higher. But I think we'll probably fill the gap, get down to 582, and I think that's where the next buy signal will be generated. And I think this whole thing is probably a head and shoulders bottom, where the low back in January 13th, if you can see that low, it kind of gapped down, then closed above it, above the previous low. I think that's probably the head of a head and shoulders bottom, and this potential pullback that I think is coming here in the next week or so is probably going to be the right shoulder. That's what I'm thinking. So we'll have to wait and see if that turns out to be true or not. But I think that's a good chance it may be. Then from there, we may go to new highs.
Absolutely.
So
it's just it is wild, really, how resilient this market has been. Because I was anticipating, at least, things have changed, of course, right? Hence what we're looking at today. But I had went just on a short term, just short the SPX, because I totally myself thought we were going to hit that gap again. But it is a strong market. I'm interested to see as well what you got looking at gold today, if you want to move on to that.
All right, we'll take a quick look at that. But the S&Ps, things changed in the market, and you really have to change with them. If you don't, you're going to get buried. Because sometimes things look bullish, and all of a sudden they turn bearish. You got to go with it. But anyhow, let's get back to the gold market. This is the bigger trend again. I keep coming back to this chart because it looks at the bigger trend. So we got a bullish signal. The last signal it got was in January 2021. That was a bearish signal. So the market in general was bearish all the way into I think it was May of this year, and the signals come when you jump above the mid Bollinger Band and both those two indicators at the bottom. The bottom window is the up down volume, next window higher is the advanced decline cumulative, and I put Bollinger Bands on for the signal. So we got a signal basically in May of last year that could be at least a multi-month, if not a multi-year buy signal. And if you notice, both those indicators have turned up on this, on the recent pullback. So these signals are still valid, and they'll stay valid as long as both those indicators stay above the mid Bollinger Band. So the monthlies are on a buy signal. Let's flip to chart 2. This chart 2 is real interesting. What it is a valuation. The bottom window is the weekly GDX GLD ratio, and when this ratio gets down to 0.145, which it did back, a couple of weeks ago. The previous times when it got that low, it's usually setting at least a short-term low, if not an intermediate-term low. And we hit it, and since then we've turned up. And so valuations wise, gold stocks are cheap compared to gold. And so how high will this chart go? Don't know, but if we probably get up around 2, maybe the valuation may be getting high, but we'll have to wait and see. But anyhow, valuation-wise, gold is cheap compared to, or gold stocks are cheap compared to gold.
Sure.
Let's go to chart. Last chart here. This is a short-term chart. It basically keeps you in the trend. There was a sell signal in November, went back to a buy signal, went back to a sell signal, and now we're back to a buy signal. The buy signals are when these two indicators, which the bottom window is the 18-day average of the up-down volume, next window higher is the 18-day average advanced decline. As long as those two indicators stay above -10, it implies GDX is in an uptrend. And if you notice, over the last week or two, or week, maybe 2, they've been above -10. So the uptrend's intact. As long as those two indicators stay above -10, the uptrend should continue. So if you notice, these two indicators hit a higher high above the previous high, where GDX has not hit above its previous high yet. That suggests that GDX will hit above its previous high, which is up around, looks like about 39. So trends up.
Fantastic. Tim, thank you so much. This is why it's always so good having you on Tuesday and Thursday. This market is constantly shifting. It is always good to try to reset and see what's going on. Thank you so much. We're going to see you Thursday, okay, Tim?
Yep, sounds good. We'll see you then. Thank you.
Folks, stay right there. We'll be right back for a short segment right after this break.